Welcome to the Nano podcast. I'm your host, Will Tjernlund, and I'm excited to have you join me on this journey through the world of nano companies. For the past decade, I've talked to thousands of business owners across various industries. It's been an enlightening experience revealing the vast tapestries of entrepreneurship and innovation that thrives beneath the surface of mainstream media coverage. Each week, I will interview different leaders of nano-cap publicly traded companies to learn about their history, what they do now, and their future. As a reminder, none of this information is financial advice, and it is all for entertainment purposes only. Let's start this week's episode. Hi, everyone. This week we have Greg Feller, the president and co-founder of Orion Digital Corp, stock ticker ORIO. Orion Digital is a financial technology company building systems for a more intelligent financial future. Greg, thanks for coming on the podcast.
Yes, thank you for having me.
So I usually start with LinkedIn and kind of try to go as far back as possible. And your co-founder is your brother, who also went to college with you. And so I'm going to go way back when to you all hanging out in a dorm room on a Friday night. Were you ever discussing someday we want to start a business together, someday we want to be our own boss, or was that just way too far flung at that point?
Well, I would say probably earlier than that. I think both sort of had an entrepreneurial sort of spirit. My brother more so than I. But during college, we started up a business in college, doing advertising, building out calendars where we gave free calendars to students and sold the advertising. And so we did that as sort of a summer job. So we were always, reading Forbes magazine and thinking about, hey, what's the next business idea that we can work together on?
Oh, that's very cool. I have an older brother and we've worked together a lot throughout the years and started businesses together and all that type of stuff. And so it all felt very relatable as I was going through it. So you graduate college and then you're instantly right into like the big finance realm. Was that again the plan right off the bat? You're saying, hey, you're reading Forbes, you're thinking, okay, I want to get into finance and I don't want to play in the little leagues. I want to get into the big leagues immediately.
Yeah, that actually is exactly right. At at undergrad, I was reading Barbarians at the Gate and kind of the latest kind of Wall Street, takeover battle books. And I knew right then that I wanted to actually be in New York. I wanted to be in the big pond and I wanted to work on Wall Street. And there wasn't really a direct path from the Canadian colleges. So I joined CIBC after Western, did some commercial banking for 3 years. But my goal was to get to the U.S., get my MBA, which is generally a good way to sort of transition into the U.S. And so I got my MBA in the U.S. And then directly out of school, I was lucky enough to get a job at Lehman Brothers in New York. And that sort of started my Wall Street career.
And remind me again, around what years did you start Wall Street?
So I started Wall Street in 95. And then I was doing biotech IPOs and M&A. It was sort of a biotech boom then. I actually met my wife at Lehman, and she was a few years behind me. She then started at Stanford Business School in 98. So we moved to Silicon Valley. This is really the beginning of the dot-com era in 98.
That's what I was kind of alluding to.
Yeah.
Okay, so tell me more.
Yeah, so she was at Stanford Business School, class of 2000. I mean, sort of her colleagues now are some of the who's who of Silicon Valley, and one is the CFO of OpenAI. And so it was sort of a moment in time there. And I moved over to Goldman Sachs and was doing tech banking right there, living on Sand Hill Road and working on Sand Hill Road in the middle of the dot-com boom.
And so I'm going to be drawing lots of parallels from then to today. So kind of as you're working in the craziest market environment to date, maybe since like the Great Depression, as you're working in Silicon Valley, while you're working at the dot-com bubble, were you just going as fast as you could and couldn't even like really think straight? Where you were able to kind of take a step back every once in a while and be like, okay, I'm going to learn my lesson this time. Don't invest in this type of company, or this kind of business model stinks. What was kind of the formative years of you having to go through kind of the craziest moment in economic history?
Yeah, I mean, it was a moment in time where people were, making up sort of new rules. They're talking about eyeballs, right? And so a lot of these companies didn't even have traditional financial metrics like even revenue, and they were going public without revenue. Definitely didn't have earnings. And so people were talking about, valuation to eyeballs. They were talking about valuation per engineer. And so there was a lot of people sort of coming up with ways to sort of justify some of these crazy valuations. But I do think so it definitely was a learning experience. And you sort of go through it, and at the time you start believing, okay, maybe this actually does make sense because you're right in the middle of it. And it went on for a long period of time, right? I mean, at the time, there were a lot of people sort of calling this a bubble. But as they say, if you're not right on your timing, it doesn't even matter if you call it a bubble, if you miss a couple of years of the bull market. So it sort of became more obvious in hindsight, I would say. But I would say that it definitely is an important part of my learnings on where we are today. And in fact, it's a lot of what we've sort of been incorporating into our own wealth platform as we sort of think about Orion and our intelligent investing platform for consumers today.
Yeah. So you work at other different kind of banking financial firms for a bit there, a decade or so, a couple more decades. Then what kind of sparked your idea that, okay, it's finally time for me to go all in, and Mogo is the way I want to go as my entry point into becoming an entrepreneur at first? Who gave you the idea first? Was it your brother? How did he convince you? What got you excited about this? Since you've probably seen thousands of business models, right, over the last couple of decades. And so what made you go, okay, this is actually the one I want to go all in on?
Yeah, so if you kind of continue on my career arc, I then went back to Lehman Brothers, and ultimately, I wound up becoming the banker to BlackBerry during their heyday, where, as you may remember, they were called Research in Motion at the time, and they were sort of the Apple of the time. And so I sort of saw that whole rise, and then ultimately fall when Apple came on. But I was also at Lehman Brothers. In fact, my wife and I were both at Lehman Brothers the day it went bankrupt. We were, back in New York. The Sunday night before the bankruptcy, we went down to the head office in Times Square, and literally we were coming out of the office with our cardboard box and all our personal belongings.
You're the Forrest Gump of finance. Every time something happens, you're somewhere in the background, right there, right in the middle of history.
When people tell me that, I do remind them that I was also at Goldman when it went public. So I've been there for good times as well. But yeah, I mean, I've had a front row seat on maybe sort of two of the most transformative kind of experience in financial markets, at least during our lifetime. And I would say that the GFC, the global or the Great Financial Crisis, is probably was more impactful on my thinking and ultimately getting to Orion and working with my brother. Right after the bankruptcy, I stayed in banking a little while longer. I even worked with Ken Griffin at Citadel for just under a couple of years. But this was sort of, the early days of the Bitcoin white paper. A lot of people were rethinking, the relationship with financial services, with money, with banks after the GFC, and a lot of people were thinking about, okay, there's got to be a better way. And so my brother, I would say, was early in his thinking on this. He was always an entrepreneur. So right after college, he really kind of did his own thing all the time, where I kind of did the corporate and investment banking route. He was doing being an entrepreneur from day one, but we spoke all the time, and we started to sort of spot some of these opportunities, seeing what was going on in the U.S. and maybe what wasn't happening yet in Canada, and found an opportunity to get the predecessor to Orion going in 2003, which was pre-iPhone, right? Literally pre-iPhone. So this was one of the earliest fintechs. I mean, Lending Club was one of the earliest fintechs, but they were several years after us. But that was sort of the genesis.
And how much of the business idea was just the arbitrage of Canada hasn't caught up to what the U.S. is doing quite yet? We should be the person because someone's going to have to be the person.
Well, I would say actually it started out before. I mean, because a lot of the U.S. fintechs weren't even around yet. It really was my brother started out seeing an opportunity in online lending in Canada, and there really wasn't much going on in the U.S. in that front either. So that's where we started, and then saw an opportunity to expand into other products. We were the first to do free credit score in Canada. We were the first to do a prepaid debit card for a Canadian fintech. We launched the first Bitcoin only account back in 2018. So we were kind of early on a number of fronts in the area.
So we've danced around it a bit, but in your own words, what is Orion Digital?
So Orion Digital is I would call it a multi-engine fintech platform focused on wealth and payments. And we already have, meaningful scale. We're, close to 70 million in revenue. On the wealth side, we have our intelligent investing platform, which we've migrated to, which we can talk a little bit more about exactly what that is. But that's really designed around helping users make long-term decisions, very different than what we believe are the traditional trading apps that are out there. On the payment side, we're processing billions of dollars of transaction volume in Europe. And touch almost 7 million end users on our payment platform. But that is very much sort of an infrastructure play, sort of the plumbing of payments. And then behind the scenes, we're using Bitcoin as our capital allocation sort of benchmark to really as a hurdle rate on what level of investment we're going to make in each of these businesses and where do we put excess capital on the balance sheet. So I think the combination of those two growth platforms anchored in sort of a Bitcoin capital allocation framework, we think makes it very unique and has an opportunity to compound long term.
So let's talk about kind of the first business you mentioned. Your competitors, like, say, Robinhood, are for some reason encouraging you to have your 1K on the same app as you do your Super Bowl bet.
Yes.
And it seems like they're on a mission to reduce their assets under management by making everyone gamble them away. When did you kind of have that epiphany that, like, hey, slow and steady wins a race? I see that you guys mentioned Warren Buffett a million times throughout your copywriting of like, hey, let's just like take your assets and compound them over time so that our assets under management grow and our customers are happy. What made you like realize that like making your customers lose money is a bad business model?
So, yeah, I think, first of all, you mentioned Warren Buffett. I would say my brother is really kind of ultimately, let's call him chief product officer of our wealth platform. He lives, eats, sleeps, and breathes this product and has done so. I mean, he actually had a period of time where he was day trading, early days of day trading. When I was at Goldman, he was day trading. And so this was before many people knew about day trading. This is when you're spending $10,000, $20,000 a month on trading fees because there were no free trading, right? So he's been a long-time investor. We've been kind of followers of Buffett and Munger since we were teenagers, as I said, reading Forbes magazine. So that's kind of sort of, I would say built in our DNA. And then when we, started to see the rise of these trading apps and that and what was going on, and we have, kids of our own and their friends that are doing it, and everybody's excited about, quite frankly, getting rich quick. And none of the things that they were doing followed at all the sort of principles of the greatest investor of all time, Warren Buffett. And we started calling it a dopamine-fueled casino before they actually brought on betting. And
before they were a real casino.
Before they actually brought, quote, predictions markets onto their platform. So here's what's interesting. We launched over 3 years ago our own trading app, very similar to the other trading apps that are out there. And we really kind of started examining the data ourselves in terms of what this was driving. We had a managed portfolio app where we're encouraging people to go into the S&P 500, and then we had an active trading app. And over the last 3 years, we looked at our trading data, which we believe is very representative of most of these trading apps. And during a period where the S&P was up 80%, from 22 to 25, the S&P is up 80%. So if you just put your money in the S&P, you're up 80%. During that period, upwards of 70% of active traders didn't just underperform, they lost money. So it's one thing if the S&P is up 80 and you're up 50. It's another thing if the S&P is up 80 and you're down 50%, right? And the median loss on these users was somewhere in the order of 70%. So that means if you
it breaks rule number 1 too. Don't lose money. It
Exactly.
breaks rule number 1 too. Don't lose money.
And rule number 2. See rule number 1.
Yeah.
So that means if you started with 100,000 instead of at 180, you're actually at 30,000. And that really obviously then solidified our view on what was going on and what needed to change. And that's really what intelligent investing is built around. So if you listen to Warren Buffett, he will tell you it's not intelligence, it's actually behavior and temperament. That is actually the fundamental issue. So people just don't have the behavior and temperament to wait, to be patient, and to do all the things that actually it will take to drive long-term returns. And so they're really going for those quick wins. And so we built our model around a subscription model and an AUM model, which means that our success is driven by that client success. If you look at the other trading apps out there, the more that account churns, the more products that they go in and out of every single day, the more money those companies make. And so as Buffett says, show me the incentive and I'll show you the outcome, right? So we wanted to build an incentive structure on intelligent investing that is actually ultimately says, if you don't trade at all this year or this month because you've made your long-term bets, we don't care, because we're going to get the monthly subscription and we're going to get an AUM fee. So that's really important. So it really is built around this sort of behavioral aspect of it and teaching long-term compounding and investing. And we think that there is a big group of users now, upwards of over 50% of a lot of the users on these platforms, that after 3 years have been losing money and now need and desperately want to find another solution. If we launched this solution 3 or 4 years ago, everybody would say, no thanks, I'm going to get rich quick over here, right? Because it's easy money. So it takes time for people to figure this out. So we're not going to be competing with those first-time investors that think there's a fast way to do it. We want to really attract the investor that, aspires to be a savvy long-term investor, has the ability to build generational wealth using a lot of the discipline and methods of a Warren Buffett.
That makes sense. And then, so we'll get into another one of your businesses under the umbrella, Carta.
Mm-hmm.
So when I'm looking at the different businesses you guys manage, Carta is the one that kind of stood out to me the most because it seems the hardest with the lowest margin. And so I'm curious what you guys kind of saw in Carta where you said, hey, this actually is a cool direction to put our business in. This is a way to get a ton of users. But what's the thought process behind Carta and where it kind of stands with your kind of umbrella of companies?
Carta, we actually acquired Carta in 2021. It was, I would say, an early pioneer in the debit, Visa, and MasterCard payment space. It was actually one of the first to do Apple Pay. So it's been around this space a long time. This is not a space that we would have organically just built something. We acquired an established player. They're mostly in Europe. They had a small business in Canada, but we exited that. So now we're a European-focused business with very large enterprise customers. This is a very high gross margin business in the high 80s to low 90% gross margin business. It's very sticky. It is a scale game. And I would say, we just really sort of passed the threshold this past year in terms of getting to EBITDA positive on that business. We're doing over 10 billion a year in annual volume. We've got some very strong European clients there. And it's sort of an interesting space right now because of areas and innovations like stablecoin, right? So stablecoin has, we think, a lot of applicability, especially as it relates to sort of cross-border. So you look at Europe, we think it's pretty interesting there. And stablecoin issuers and players are looking for companies that already have that distribution and have the rails established, which we have over a decade working with Visa and MasterCard. And as I say, we've got almost 7 million end users through our Carta platform. So we think stablecoins is a really interesting opportunity that we're, looking into actively right now. It's a separate business from our existing wealth business, which is a direct-to-consumer business in Canada, but it's one that we think has a lot of growth potential, and it's pretty exciting as we sort of move into digital asset space and payments as well.
Okay, to get into a couple other arms and try to combine some of them. So, say hypothetically, you all invested in some startup way back when. You get some sort of liquidity event because some company buys it out or something.
Yeah.
How do you decide where you'd put, say, $40 million in cash between investing in more startups, investing in just Bitcoin as part of your treasury strategy, or investing in R&D or new marketing? Like, how would you kind of approach a new bundle of cash that your company might stumble upon?
Well, we actually are in the middle of that right now because back in 21, we did a series of investments in a Canadian crypto exchange called CoinSquare. We acquired just under 50% of the company. It became the first fully regulated crypto exchange in Canada and therefore in North America. Canada was early to adopt regulation versus the US. And then during the crypto winter, we merged that into a public company called WonderFi. We became the largest shareholder of WonderFi. And then early last year, Robinhood announced that they were acquiring WonderFi for $250 million. We were the largest shareholder. And we ultimately wound up taking over $30 million of cash out of that investment. We just announced actually in the last couple of days our final monetization of that investment. And so, we've got just under 30 million of cash on our balance sheet. And this is really where the Bitcoin hurdle rate comes into play. We believe Bitcoin is a store of value. We believe it has a digital gold type properties. It's got a historical return north of 30% CAGR. We think it has a 10-year future return in that area in the sort of the 25 to 30% range. And so we are using that as sort of our hurdle rate as we look at investing in our other businesses. So if we believe that in intelligent investing, in our wealth business or in our payments business, we can hit that hurdle rate, then we will deploy cash there. If we don't, then we think excess cash we're better off putting in Bitcoin. So Bitcoin is really for that excess cash. It's not for working capital. We have plenty of working capital. We're not levering up to buy Bitcoin. So some people try to put us in this Bitcoin treasury box, but we're not. We're an operating business that just happens to use Bitcoin as that excess capital and that hurdle rate. But we're not levering up the business or putting our shareholders at risk in any way as it relates to that. And as far as other private companies, we back in 2019 merged with another public Canadian company called Difference Capital. It was controlled by a fairly high-profile Canadian investor, a guy named Mike Weckerly, who was on the Canadian Dragon's Den, which is the origins of Shark Tank, and he's now actually remains one of our largest shareholders. But that we just actually acquired a portfolio of investments that sits on our balance sheet today. So that's really more from a legacy perspective, and our goal there is to monetize those. And then either invest it in our core business or put excess capital into Bitcoin. That's how we're looking at it.
So we'll get into the not investment advice, predict the future part of the episode. So on one end, I get the Bitcoin argument of it's deflationary over time. It's already programmed in. You can't change the rules now. On the other end, I see the bull case for stablecoins and that stablecoin adoption worldwide makes it so that we don't have to pay nearly as much fees. Plus, it helps pay down the U.S. debt by buying a bunch of treasury bills with it.
Yeah.
But the stablecoin's pegged to the U.S. dollar. That's inflationary. So how much have you all thought about some sort of like Bitcoin pegged stablecoin type thing? Because it seems like it kind of is the best of both worlds for the different rails and stuff you guys are working on.
So we haven't spent a lot of time thinking about that. I think from our perspective, we are not looking to create our own stablecoin. We see ourselves as a distribution channel, both on the payment side and on the consumer side in Canada. So we're not looking to create our own stablecoin. So we're looking to, I would say, provide access to those stablecoins that end consumers and investors want access to. And I think that's how we're going to sort of play that. And then Bitcoin, again, we're sort of treating as digital gold and an inflation hedge and a store of value. And that's how we're going to treat it on our balance sheet. But we're not going to come up with our own bets on creating stable coins. We'll let the other players that are, the platform players that want to do that. And then we focus more on the distribution side and getting it out to end customers.
So, Greg, what gets you out of bed in the morning? What gets you excited about Orion that you're saying, hey, this is where I want to spend my time for the next 5 years? What gets you pumped up?
Yeah, I mean, we are, my brother and I are get up every morning, super excited. We're living in a really unprecedented time. I mean, AI is changing everything. It's changing the way we work internally. It is giving a big advantage to companies like ours that are smaller and have less resources, but understand how to leverage AI. So we think there is a massive opportunity here to leverage that. And we have a window of time here where a lot of people won't be leveraging AI anywhere close to what it's capable of. So if we look at, for instance, on the marketing side, I mean, my brother's been working with AI as we sort of build out our intelligent investing brand and marketing strategy. And as he said, I could have hired a $500,000 a year chief marketing officer, and it would have taken them 6 months to come up with this. and it wouldn't have been half as good as what I am getting working directly with AI. So we think we've got a really amazing opportunity ahead of us. We think that what we're doing on the wealth side is very unique. There's a lot of people chasing the same thing, which is that dopamine fueled kind of hit, which isn't driving outcomes. I mean, nowhere does anybody ever talk about, when people talk about the Robinhoods and everybody else in the world, what do they talk about? They talk about their functionality. Hey, they've got option trading, they've got crypto, they've got predictions market. Is anybody saying, hey, how are your customers actually doing? What are the returns they're actually generating, right? Nobody's talking about that. Why aren't they talking about it? Because I don't think it's actually great data. We believe in a world of AI that ultimately the best investing platforms will be those ones that actually drive the best outcomes for their customers. Now, it doesn't mean these other businesses aren't good businesses, right? They may be good businesses for the companies, but they may not be great solutions for the majority of consumers. If you are a super savvy, sophisticated trader, you may be able to leverage all those free tools and earn high returns. But for a lot of people that are really just addicted to the noise, it's not going to drive the right behavior. So we're building it for ourselves. We're building it for our kids, and we're seeing that kind of traction take hold. And that's getting us, excited every morning and every day that we wake up. So yeah, we think there's a massive opportunity in what we're doing, and we're just excited to, have this moment in time to do it.
So if people want to learn a little bit more about Orion Digital, want to sign up for your investing app and such, where should I send my audience?
Orion-digital.com is our homepage. To get the investing app, you have to be Canadian, unfortunately. You can also follow Orion Digital X on X for news, and then reach out to us through our website. But very glad and happy to be able to talk to you. The other thing I would just say is, my brother and I are very much aligned both with our customers and with our shareholders. We're collectively large shareholders in the company. We have never sold a single share ever. And we've been consistent buyers of the stock over the last 2 years. Small caps are difficult, right? Sometimes to sort of break out of the noise, but with the upcoming launch of intelligent investing and the exciting things that we're doing around payment space, and quite frankly, where the markets are, we think this is a great opportunity for us to get the story out there. So appreciate you having me on.
Thank you for being on. And for those of you still listening, please remember to subscribe and review. Thanks.
This podcast is for informational purposes only and does not provide financial, legal, or any other advice. The information is not investment advice or any offer to buy or sell any securities or to make any investment. The views expressed by the guests are their own, and any reference to third-party products, services, or information does not constitute an endorsement therefor by NanoCap Podcast or its affiliates. The NanoCap Podcast Express disclaims all liability for any individual's use of the information presented.